when you see the potential of kind of this bloodbath with so many cryptos potentially going out of business. So that's to summarize. Sorry it was long, but that was to summarize kind of where I'm at on the Bitcoin and crypto markets.
In this interview, Gareth Soloway talked about his latest price targets for Bitcoin and other cryptos. He talked about inflation, how there's so much FUD in the market, and why panic selling might not be a good idea. He then talked about a price point where he'll start accumulating Bitcoin. He also explained his dollar cost average strategy that you can use today to make more profitable trades. Also, I'd just like to remind you that we're giving away $100 to a random subscriber at the end of this month. To take part in it, all you have to do is subscribe to our channel, turn on post notifications, like this video, and leave a comment in the comments section below. Good luck. Now, let's look at his interview.
What a drop it's been. I mean, again, there was so much bullish sentiment when we were at that 65, 69,000 level back in October, November. And for newer investors, I want you guys to always remember when everyone is clamoring and kind of just shouting about how great something is, it's usually just about to top out. So you have to start thinking contrarian and not getting caught up in the hype. And the same thing goes on the downside. When everyone is hating something and saying, oh, it's never going to survive. For instance, we saw that in 2018 and early 2019 in crypto, where people started to doubt it. Bitcoin got down to 3,500 or so. And you saw a lot of that same kind of bearish sentiment, overly bearish, panicking, fear. And that was the time to buy. So always remember that going forward. Now, if we bring up the charts here, let's take a look at the charts on Bitcoin. We have come down to this 20-ish K level, which was the previous high from 2019. There were a lot of people that said it'll never go here because it's never gone to a previous high pivot of a past cycle. The reason I thought it would, number one, if we are in a bear market, which every 4 years apparently it is, and this is again proof that this is a bear market with this much downside in Bitcoin. Every bear market, we've seen 80 to 85% correction, which actually means that Bitcoin could go even a little bit lower. Now, 20,000, my high-end target's been achieved. I do think that you should get some sort of bigger bounce here. Right now, it's back above that 20 area. It's going sideways. I'm still in the camp that you could trade back to about 25,000, which would be this pivot low from the Terra Luna collapse. And maybe, just maybe even back to 28.5, 28.7, which is this low area right here. But ultimately, when I look at the way it is, and we talked about bearish sentiment and bullish sentiment, you still don't see panicking yet in Bitcoin. Yes, you see a lot of people under pressure, hurting because of the massive losses they're sustaining, but they're not ready to throw in the towel. And throwing in the towel is absolutely key, or at least that mentality of like throwing up your hands in the air and saying, this isn't working out. This is never going to work out. I give up. That's what we need to see. We haven't achieved that yet, nor have we achieved 80 to 85% downside from 69,000. Now that gives us a target around 12,000, which is my next target. So after a near-term bounce here, I think we roll over again and you break this level and you're going to head down, and I'll do some trend lines on here to this area right in here. So right around this 12,000 area, huge support here. You can see this pivot and this area right here. So that'll be your secondary target. I do hope that that's the low. I don't know for sure if it will be the low, but hopefully it is. I am in the accumulation zone. So anything below 20, as it drops, I'm slowly starting to accumulate a hodl position, meaning that up until this point, I've been swing trading it. I go long at pivot support, short at pivot resistance, and kind of back and forth. And that's how you make great money in a bear market. Eventually, I'm a huge bull on Bitcoin, so I think it's going to go to 100,000, 500, etc. So I do want to start to accumulate down in this range. So I started a little bit at 19,000, about a 1/6 position. And what that means is that I take the amount in total that I want to buy of Bitcoin. So in my head, I think, all right, well, do I want 500,000 in Bitcoin? What do I want? And then I divide it into six amounts. And I started putting that first sixth of the amount in Bitcoin at 19,000. I'll probably do every 2,000 to 3,000 below that. I'll add another 1/6. And this allows me to dollar cost average. So, I'm clearly, I know what I'm talking about when it comes to charts, but I certainly don't know the exact low on Bitcoin. So I'm not even going to try to guess it.
Mm.
Instead, I do dollar cost averaging and slowly accumulate and then wait for that next bull market to take place, which I do think it will. So again, 12,000 is your next target. There's a bunch of cool things that I can show you here on the chart of why that makes sense. If you take a look at this high right here, okay, and then you take this low, and the reason I'm noting this high and this low, because this was basically a straight fall. You had small bounces, but this was pretty much a direct move down. And then you had this 3 months of consolidation. If you take this high, all right, so basically take this distance from here to here, and if you take the same distance and do what's called a measured move, it also gives you 12,000, which gives you that target. So basically you have this kind of interim period right here. And then on either side, you have the downside, this distance equaling this distance. So there's a bunch of cool things that kind of match up around 12,000. I also think it's important for investors to kind of understand that in the dot-com bubble, and when it collapsed, and I really do liken what's going on in crypto to the dot-com bubble, is that you saw many crypto or many dot-coms go out of business. We've started to see that. We've seen Terra Luna, the UST, kind of be gone or go bust. Celsius is kind of a signal, but there needs to be more of that. And so for me, I'm focusing on the best of breed here. I'm looking at Bitcoin and Ethereum. Those are the ones that I feel comfortable holding for the longer term. I'm not sold yet on Solana, Avalanche, Ripple, any of these other ones, because I just don't know yet, and I don't want to take that risk. So for the swing trading side, sure, I'm in Solana right now. I'm in Avalanche right now for this bounce, but not as a hodl position. And that's more of a safety thing. I just don't feel comfortable putting my money at risk when you see the potential of kind of this bloodbath with so many cryptos potentially going out of business. So that's to summarize. Sorry, it was long, but that was to summarize kind of where I'm at on the Bitcoin and crypto markets. For those of you guys that were around in 2008, 2009, one of the key things that kind of started the final collapse on the stock market was the Lehman Brothers collapse, right? So it was this epic kind of banking collapse. And that kind of began our last flush down before the markets bottomed in March of 2009. So you do want to see that type of thing. If you go back to the dot-coms, if you look at a stock like Amazon, one of the craziest things, and I think we talked about this the last time we talked, was that the pattern in Amazon, it looks identical to Bitcoin's pattern when it topped, this M-type pattern. And Amazon actually dropped from about $110 down to about $7 to $6. So, I mean, that's a huge, basically you're talking 95% downside there on that. I don't know if Bitcoin will do that. The fact that it's a stated run of 21 million, the fact that you have more adoption all the time may keep it from doing a full 95% drop. But you have to, as an investor, if you're a pro investor, you look at all angles. You never kind of hide your head in the sand and say, oh, well, I don't want to think about that. You have to. You're dealing with real dollars and real cents here, and you have to be always ready for anything. So that's one of the reasons why I've kind of spaced out my buys. You might say, well, if you think the low is going to be 12,000, well, then that doesn't make sense to buy every 3,000 down from 19, 16, 13, and then all of a sudden you're at 10. And the key is that as a trader, I've learned lessons the hard way, which is things go below where you think they're going to go, and they go much higher than you think they're going to go. So you have to be prepared for that. And I always want to be prepared rather than be all of a sudden saying, oh, darn, I'm all in on Bitcoin, and it's now 50% lower where my average is. I don't want to be in that position. Yeah, I think the Fed by the end of this year will no longer be talking about rate hikes, and you might even start sensing that in 2023, early 2023, you could see some cuts. And again, I know that sounds crazy with inflation where it is, but I really do think, we've already seen just in the last week, oil has fallen from basically $124 to about $104, $102 per barrel. That's already a big drop. Now, it's going to take some time for that to filter into inflation numbers and bring inflation numbers down. But I actually think oil is going much, much lower. And also the key is going to be, it's not just the inflation side. What the Fed is doing is aggressively tightening. They're reducing their balance sheet. They're raising interest rates. They've stopped all printing of money that has been going into the system. And the economy is starting to kind of go into a little bit of a shock. Now, you don't see it yet because it takes some time to go, but you add in inflation and the impact on average people because of higher oil and gas and food prices. And there is definitely a pullback that could push us into a recession. So I think that inflation will likely come down to a 4 to 5% handle, which is still way above the 2% mandate that they wanted at. But that, when you look at 4 to 5% inflation, and then if you think a recession could hit and unemployment could go to 7, 8, 9, 10%, which one do you think the Fed is going to care more about? And the answer is they'll absolutely care about 10% unemployment if there's only 4 to 5% inflation, and they'll attack that. The only way the Fed knows how to do that is by lowering rates and printing money. So that, to me, could be where Bitcoin bottoms out late this year, maybe in early 2023, as you start to see this kind of recession hit.